What's going on, everyone, and welcome back to Explain the Charts. Today we are breaking down the intense price action in Tesla, symbol Tesla. The stock has been on an absolute tear this month, but the last 48 hours have seen a significant pullback, leaving many traders wondering what comes next. First, let's get into the news, because there is a major tug-of-war between bullish and bearish narratives right now. On the bullish side, the long-term vision for Tesla as an AI and robotics powerhouse is stronger than ever. We've seen a flurry of analyst upgrades, with Wedbush raising their price target to an incredible $600, Piper Sandler to $500, and Baird to $548. They are all betting that Tesla's ventures into autonomous vehicles and humanoid robots will justify its high valuation. This optimism was further fueled by Elon Musk's reported $1 billion share purchase earlier in September, which ignited a massive rally. The company also recently received regulatory approval for robotaxi tests in Arizona, adding credibility to their autonomous ambitions. However, the bearish case is centered on the present-day reality of their car business. Recent data from Europe was not good, showing a staggering 37% year-over-year drop in Tesla's August sales. Competitors like BYD are gaining ground, even outselling Tesla in the EU for the second straight month. This has led some investors to take profits after the huge run-up, questioning if the AI hype can continue to overshadow slowing EV sales. Adding to the pressure, some firms like CFARE have downgraded the stock to a sell with a $300 price target, citing a disconnect from fundamentals. So we have a classic battle, a potentially revolutionary future versus challenging present-day numbers. Now, let's see how this battle is playing out on the charts. Looking at the daily chart, you can see the story of the year unfold. After bottoming out earlier in the year, we saw a massive rally through June and July, peaking around $270 before a sharp correction. The stock then based throughout August before the explosive move we saw this month. Let's zoom in on this recent action. This rally in September has been almost vertical, launching from the $330s to a peak of $444 just 2 days ago. This move was clearly fueled by that bullish news cycle we just discussed, particularly the analyst upgrades and AI excitement. Notice the significant gap up between September 12th and September 15th, a powerful sign of buyers rushing in. But look at the last two candles. After hitting a high of $444 on September 24th, the stock was rejected and printed a large, bearish red candle yesterday on high volume. This is a classic sign of profit-taking and the bears stepping in at a key resistance area. To really understand this reversal, let's drill down to the 15-minute chart for the last 2 days. Here on September 24th, you can see the price trying multiple times to break and hold above the $444 level. It eventually failed, and that's when the selling started. Yesterday, September 25th, the selling pressure intensified dramatically in the afternoon. We saw a waterfall decline from around $435 all the way down to a low near $421. This sharp, high-volume drop is what created that nasty-looking candle on the daily chart. It's likely that the negative news about European sales acted as the perfect catalyst for traders to lock in their substantial profits from the September rally. Today's price action, based on the latest candle, shows an attempt to bounce, but so far it has failed to reclaim any significant ground, indicating the bears remain in control in the very short term. Now, let's go back to the daily chart to map out the critical levels you need to be watching. The most immediate and crucial support level is right around here at the $419 to $422 zone, which marks yesterday's low. If the price breaks and closes below this level, the selling could accelerate. The next major support area is the top of that big September gap, right around $410. Below that, the ultimate line in the sand for this bull run is the bottom of the gap, near $396. A break below $396 would signal a much deeper correction is underway, potentially targeting the August highs around $360, which should now act as support. On the upside, the resistance is clear. Bulls need to push the price back above the $435 level to regain momentum. But the key resistance to break is the recent high of $444. A convincing close above $444 would invalidate the short-term bearish reversal and open the door for a move towards the December 2024 high near $454, and eventually the all-time high around $488. So, what's the game plan here? For a short-term bullish case, you want to see the price hold this $420 support level and begin making higher lows on the intraday charts. Reclaiming $435 would be the first sign of strength. The catalyst for this could be the broader market staying strong or anticipation of good Q3 delivery numbers. For a short-term bearish case, a failure to hold $420 is your trigger. This would suggest the negative sales data is having a real impact and that the rally was overextended. Traders would then look for the price to fill that gap, targeting the levels we identified at $410 and $396. Long-term, the story is entirely dependent on whether you believe in Tesla as a car company or as a disruptive AI company. If you believe in the AI narrative, these dips are buying opportunities. If you believe it's overvalued based on its car sales, this pullback could be the start of a much larger move down. Let's recap the most important takeaways. Your key resistance levels are $435, $444, and the all-time high of $488. Your key support levels are $420, the gap fill area between $410 and $396, and the major zone at $360. Now for our unbiased prediction. Given the sharp, high-volume reversal and the weight of the negative sales news, we believe there is a 60% probability that Tesla sees further downside or consolidation in the immediate short term. A test of the gap support down to the $396 to $410 range seems likely before the bigger players decide if this dip is worth buying. A break and daily close below $420 would reinforce this outlook. Conversely, there is a 40% chance that this is just a quick shakeout. If buyers step in aggressively to defend the $420 level and push the price back above $435, it would signal that the bullish momentum is not dead yet. This scenario would be reinforced if the broader market continues its rally. The two most important things to watch are the upcoming Q3 global vehicle delivery numbers, expected in early October, and the Q3 earnings report on October 21st. These events will provide a crucial dose of reality and will likely dictate the next major trend for the stock. That's our analysis on Tesla for today. This is not financial advice, so please do your own research. What do you think is next for Tesla? Let us know in the comments below. Don't forget to like and subscribe to Explain the Charts for more in-depth chart analysis. Thanks for watching.